Now, May was the seventh consecutive month that China's central bank added to its gold reserves.
China has just made a shocking $200 billion move that could shake the entire global economy. While Trump warns Beijing to obey America's currency rules, China is quickly dumping dollars and hoarding gold at levels not seen since World War II. And here's the twist. Analysts believe China may be hiding far more than it admits. Is this the beginning of a global financial reset? Stay tuned. Trump has once again pointed his finger at China, demanding that Beijing obey U.S. currency rules. But here's the truth. Those very rules are written, bent, and rewritten by Washington itself, whenever it suits its own agenda. America talks about fair play, yet every quarter it changes the scoreboard. While Trump threatens China, the U.S. government is printing money non-stop, cutting interest rates and piling trillions onto its national debt. The Federal Reserve has already cut rates under Trump's pressure, as reported, and was even expected to announce more reductions amid economic slowdown. Instead of stabilizing the dollar, these moves shake global confidence even more. The irony is striking. Washington accuses others of manipulation, while it manipulates the system at home. And when the U.S. dollar weakens, American leaders blame Beijing instead of facing their own policies. This isn't global leadership, it's double standards on display. China isn't breaking the rules, it's exposing them. And the louder Trump shouts, the clearer America's weakness becomes. Because in today's financial war, words are cheap, but actions decide the future. The U.S. dollar, once seen as the strongest pillar of the global economy, is now showing deep cracks. Since the start of 2025, the dollar has already fallen nearly 9%, shaking investors and allies alike. Instead of strength, Washington is preparing another massive rate cut of 100 base points this September, which could push inflation even higher. These desperate moves are not boosting confidence, they are destroying it. America hoped a weaker dollar would make its exports cheaper, but the opposite is happening. Manufacturing job losses have surged. Recent reports show U.S. manufacturing employment has dropped by 78,000 jobs over the year, with 12,000 lost in August alone. In just 5 months, over 688,000 American workers have lost their jobs. The factories are closing, the supply chains are breaking, and ordinary families are paying the price. Even with a failing dollar, U.S. products remain the most expensive in the world. Rising wages and higher input costs keep American industries uncompetitive against cheaper global rivals. Instead of growth, America's policies are creating fear. Instead of stability, they bring chaos. The government's strategy is backfiring, and the dollar is no longer seen as untouchable. For decades, Washington used its currency as a weapon of power. Now, that very weapon is slipping out of its hands. While Washington argues about currency, Beijing is quietly building a shield made of gold. For 7 months in a row, China's central bank has been adding to its reserves, with 60,000 ounces purchased in May alone. But experts believe the real number is far higher. Analysts estimate Beijing may be hiding 60 to 70% more by using state banks, the military, and sovereign funds to buy off the record. This is not about making a profit. Gold already climbed 27% in 2025, reaching $3,500 per ounce. But China keeps buying anyway. Why? Because this is about protection, not price. Gold cannot be frozen by sanctions. It cannot be devalued by another country's printing press, and it cannot be controlled by Washington. Every bar of gold China adds is a firewall against America's threats. And while the U.S. talks loudly about rules, Beijing answers silently with bullion. This strategy shows that China is preparing for a world where the dollar is no longer trusted. It is not a gamble, it's an escape plan. Piece by piece, gram by gram, China is writing its own financial security in gold. China is not alone in turning its back on the dollar. Across the world, central banks are racing to buy gold at record levels, with 1,000 metric tons expected in 2025. This is not just a Chinese story, it's a global shift. Countries like Vietnam, Singapore, Turkey, and even France have raised their gold reserves since January, showing that the fear of dollar instability spreads far beyond Asia. At the same time, sovereign wealth funds in Saudi Arabia and Norway are moving money out of U.S. treasuries and into gold ETFs and physical bullion. Even the International Monetary Fund has admitted that the dollar's share of global reserves has slipped to 58.4%, its lowest point in decades. Europe is worried too, with the European Central Bank warning that America's massive debt and reckless financial policy are undermining trust. Each purchase of gold, each trimmed treasury holding is a quiet vote of no confidence in Washington's promises. The U.S. once held the world hostage with its currency. Now, the world is building its escape route. This is no longer about trade disputes or interest rates. It's about survival in a system everyone knows is breaking. And China has simply shown others the way. America's trade numbers tell a story of weakness, not strength. The U.S. trade deficit narrowed earlier this year, but not because exports suddenly boomed. Instead, imports collapsed by 16%, with sharp declines in consumer electronics, industrial machines, and automobiles. That means fewer goods are coming in, factories are struggling, and supply chains are breaking. According to official data, exports grew only 3%, mainly from energy and raw materials, while advanced manufacturing stayed in decline. The ISM Manufacturing Index has been stuck under 50 for 11 straight months, a clear sign of contraction. Even with a weaker dollar, U.S. products remain overpriced compared to global rivals. For example, American steel costs about $958 per ton, while the same steel in China sells for about $600. These high stakes make U.S. goods uncompetitive abroad, leaving industries without customers. Washington is pressuring other countries to raise their currency values, but that is not a strategy, it's an admission of failure. Instead of fixing its own system, the U.S. is trying to force others to weaken theirs. This exposes the real problem. America is losing its industrial edge while pretending the world is to blame. Washington's accusations of currency manipulation are not only aimed at China anymore, they are spreading to America's own allies. The U.S. Treasury's monitoring list now includes Germany, Japan, Switzerland, Ireland, and Singapore, countries that run large surpluses but follow open market systems. Switzerland was officially placed on the watch list and called out by the U.S. Treasury for its currency and economic practices. Germany's surplus remains high because of its export-driven economy, while Switzerland and Ireland have already filed diplomatic protests, calling Washington's changes unfair and misleading. Even Japan, one of America's closest partners, is resisting demands to change its policies. At the same time, the International Monetary Fund has reminded Washington that exchange rate flexibility is normal in open markets, directly undercutting its claims. The European Central Bank has also warned that U.S. fiscal recklessness is damaging global stability, far more than any foreign currency moves. America is demanding rules that others do not recognize, while refusing to follow those same rules itself. The result is growing resistance. Instead of isolating China, Washington is isolating belief. The louder the threats from U.S. officials, the less seriously they are taken abroad. And the more America pushes, the more the world learns to say no. Behind the headlines, the real victims of America's broken policies are ordinary workers. In May alone, U.S. companies cut 93,000 jobs, with the biggest losses in tech, retail, and logistics. Year to date, more than 688,000 layoffs have been announced, the worst since the 2009 recession. These are not just numbers, they are families losing paychecks, savings, and security. Rising import costs have crushed industries that depend on global supply chains. One auto supplier recently furloughed 2,000 workers across 3 states because imported parts simply stopped arriving on time. Reshoring projects that were supposed to bring jobs back to America are failing, weighed down by delays and huge costs. Growth forecasts are being slashed, with the economy slowing to nearly half the pace it had last year. Meanwhile, ordinary Americans face higher prices in stores, fewer opportunities at work, and less hope for stability. Washington keeps blaming foreign countries, but the real collapse is happening at home. The truth is clear. America's economic engine is sputtering, and workers are paying the highest price. China's gold strategy isn't just about wealth. It's about rewriting the rules of global power while America drowns in its own debt. Subscribe now and join us as we uncover who truly controls the future of money.